Hey, what's up, my friends? So, welcome back to another week of our weekly market analysis, right? This week, right, a number of markets have already, broken out of the range, right? And some of you might have missed the move, like, oh, Rayner, I've missed the move, right? Do I enter the market? Do I chase the market right now? Don't worry, right? I'll share with you, right, how you can actually still get on board the trend even though you have missed the breakout, right? So, all this and more in today's video. I'll see you there. Okay, so the first market that we'll look at is Euro Dollar. Okay, you can see that this market, just zoom back a little, pretty much formed somewhat of a head and shoulders pattern. Then you have this neckline over here, and the market has now break and close below this area of support, this neckline. And some of you might not be in the trade. So now the question is, where can you find, right, a favorable trade location to short Euro Dollar? And I want to share that with you. So for those of you who missed the breakout, right, who are not on this trade, right, don't worry, because there is always, right, trading opportunities. So what I'm looking at is that on this daily time frame, you know that there's a 1155 level. It's a previous support, right, that could act as resistance. So on the 4-hour time frame, this is where the price action becomes clearer. Right now you can see that the market is having a retracement. So what I'm anticipating is for the market to approach higher into this area, right, where previous support could act as resistance. But I'm not just going to short blindly at this level, place a sell limit order and then just put my stop loss above somewhere here. No, I would like to see the price confirm my analysis. And how that can happen is that you know that on the daily time frame, the market is in a downtrend. So, and right now it's having a retracement. So the first clue, right, that the market is telling you that the retracement is about to end is where you see a lower high and lower low. So for example, if you get a pullback, the market does a normal retracement, a pullback, and then it forms this weak pullback, right, where it shows you that the buyers are unable to push price higher, and then it breaks below this low, right, breaks below this low. At this point, right, now you have a lower high and a lower low. So this tells you, right, that this market, the pullback, is likely over, right? And the trend on the daily time frame is about to resume itself. Okay, so this is the first sign, right, that the market tells you that, hey, the pullback is about to end, right? And this is a possible time that you can actually short this market. Plus two things. Number one, daily, the time frame, the trend is down on the downside. And number two, you're trading from this favorable trade location, right? Which is this one over here, this previous support that could act as resistance. Okay, so this is a trade setup that I'll be watching for on Euro Dollar to see if the market can pulls back into this area, right? And then, it shows signs of weakening as the price makes a lower high and lower low. Okay, so this is for Euro Dollar, right? Worth keeping a lookout this coming week. Another market that's worth looking is New Zealand yen, right? So this market, right, if you look at it, right, it has came into this area of support, plus the lows of this downward trend channel. So this might seem like a counter trend trade because the trend over the last I would say year or so, right, the market has been trading lower, series of lower highs and lower lows. But right now this price, right, is at a very favorable trade location at the area of support plus the downward trend channel. So again, right, I don't want to jump the gun here. I don't want to just have a buy limit order to get long. I want the price action to confirm my buyers. And one way to go about it is to, how do you know whether the retracement is over, right? Again, let the price speak to you, right? You can see that right now the market made a strong move lower, and then you have somewhat of a range over here, right? A higher low, and then this into this area of resistance. So a couple of ways you can trade this, right? Number one, you can wait for a break and close above the resistance, and then you go long, and then you can just have your stop loss, right, referencing from depending on your own risk management. You can reference it from this low, right, 1 ATR from this low, okay, or from this low, depending how conservative or aggressive you are. Okay, so that's the first way you can trade it, right, waiting for a break and close above this area of resistance. Another way you can trade it, right, is to see the market break out, does a weak pullback, right, where you get somewhat of a bull flag pattern, right, where it tells you that the sellers are unable to push price lower, and then you trade the breakout of these highs, and you go long when the market breaks above this highs, right? And you go long. Again, stop loss can just reference from this low, 1 ATR below it, which is somewhere about here. Okay, so this is a possible trade setup on New Zealand yen as well, from a favorable trade location at the lows of the downward trend channel, as you can see over here, plus the confluence of this area of support. Okay, moving on. Dollar against the Indian Rupee, right? So this is a trade setup that I believe I spoke of, right, in the previous market analysis. I said that, this market, right, there is a volatility contraction, right? The range of the candles are getting smaller, and a trader could look to trade the breakout of this highs and have your stop loss, right, just 1 ATR below this low. And in this case, the market did went in our favor. But again, if you miss the trade, right, don't worry, because there is always trading opportunities, right? Let the price come to you, right? And one way to go about it is, again, number one, the trend is up, so you want to be a buyer, right? Number two, where is a favorable trade location? It's over here, the $69 area, right, where previous resistance could act as support. Okay, how about entry trigger? Well, we can go down to the lower time frame and let the price action tell you when the pullback is about to end. So it could come down lower into this area of value, then it breaks out higher, a pullback, and then it breaks up higher. So now at this point, you have a higher low and a higher high when the market breaks above this high. So this tells you that the pullback possibly could have ended, and you can get on board the trade, trading from a favorable trade location, a previous resistance turn support, and you're trading in an uptrend, right? Favorable trade location with a favorable trading setup. So this is the dollar against the Indian Rupee. Another trade worth watching. And one last thing, right, is I want to talk about is silver. Yep, silver. So silver, right? So this one again is a market that pretty much break down this week as well. Very strong breakdown. You can see the pump, right? Just all the way down lower. So again, where could you have, traded this, right? So this should be obvious to those of you who have been following me for a while now, or, who have seen how I analyze the markets, right? So one thing that I always talk about is breakouts with build up. So what is a build up? So build up, right, refers to a tight consolidation, right, where you see that the market doesn't have room to go up and down. You can't see the swings in a build up, right? This build up is very tight. You can't see the swings. It's not like this part over here where you can see the market swing down, swing up, swing down, swing up. This is not a build up. This is a range. A build up, right, you're not able to see this pocket of space over here, right? So this is what I call a build up. And the reason why I like to trade, right, when there's a build up is, number one, you have a tighter stop loss. You can just reference your stop loss, right, from this highs, right, and put it somewhere here. And if the market breakdown, right, your stop loss is quite tight, right, compared to if you are trading without a build up, right? If let's say, you want to trade the market rallies higher and break out, where are you going to reference your stop loss? Let's say you enter the break of this highs, your stop loss will be, referencing from this low, which is pretty done wide without a build up, right? So this is number one reason why I love trading breakouts with build up. The second reason is the market moves in volatility cycles. It moves from a period of low volatility to high volatility. That's a fact of the market, right? Volatility is never constant. It always changes over time. So this is a low volatility environment. And what happens when volatility picks up and it breaks down, right? If, say, for example, it breaks down and volatility expands, you can see that you are in a very favorable trade location, right? Because you have a tight stop loss in a low volatility environment. And if volatility does pick up, right, your R multiple, right, could increase favorably in your direction. Okay, so this is the second reason why I like trading breakouts with build up. So anyway, the market has already left. It has moved down, and at this point of time, if you have missed the move, again, don't worry. There is always trading opportunity, and what you could possibly look at is a couple of things. Two ways you can trade this, right? The first, more aggressive way is you just place a sell limit order over here. Why is that, right? So assuming, right, you had missed this trade entry initially, right? And let's say you just place a sell limit order over here and you get filled, right? This is as good as taking the initial breakdown that you missed earlier. It's the same thing, right? The time that you should use this approach, right, is where your trailing stop loss has not been hit. If your trailing stop loss has originally been hit already, then you don't want to, just place a sell limit order over here, because the original trade would have been exited anyway as the trailing stop loss has been hit. However, if your initial trade, right, say shorting the lows of this breakdown, the trailing stop loss has not been hit, right, and you place a sell limit order over here and you get filled, it's the same as, shorting the original breakdown had you not missed the trade. Okay, so this is one way you can go about trading silver. Just place a sell limit order if your trailing stop loss or whatever, or your exit mechanism has not been triggered. The other way you can trade it is similar to what I just shared earlier. This is the area, right? Previous swing low that could act as resistance. So you can just go down to the 4-hour time frame and then look for the pullback to end, right? The pullback is coming in, right, into this area. Let it break down, form a lower high and a lower low, right? If it breaks down, you get a lower high and a lower low, and you can go short on the break of this low. And you can just, reference your stop loss using this swing high over here in anticipation that the trend would continue. Okay, so this is my take on silver. So we have covered quite a few things this week, right? We talk about euro dollar, right? Short on this. So just a quick recap: euro dollar short, dollar against the Indian rupee, that one is long. We spoke about New Zealand yen, that one is long, and last but not least, silver, which is short. Okay. So now, if you want to learn more about my trading strategies, right, you can go down to my website, tradingwithrayner.com. Just scroll down and download these two trading guides, right? One is the ultimate trend following guide, teaching you how to write massive trends at the market. And the other one is about price action trading, on how to better time your entries and exits. Both of these guides are free, right? So just come down to my website, tradingwithrayner.com, click this blue button, right? And I'll send it to your email address for free. All right, so with that said, right, if you have any comments, let me know below, right? If you have enjoyed this video, hit the like button and subscribe to my YouTube channel. So with that said, I wish you good luck and good trading. I'll talk to you soon.